Hello, everybody, and welcome to Putnam County Business Council's Business Talkback panel. Construction and real estate, what does the future hold? I have a small little blurb I want to say, and then I want to thank some of our partners and sponsors. The Putnam County Business Council's agenda is to bring greater value to the members through a range of virtual and in-person, hopefully, events sooner than later, right? As part of our 2021 educational and communication initiatives, we're implementing some industry-based programming to hone in on some key business sectors that have significant impact on Putnam County economy, employment, and residents' quality of life. So it's a lot of education that we're bringing to you each and every month, each and every quarter from a lot of different sectors. Construction and real estate fit hand in hand as a bellwether industries that signal future economic strength, prosperity, and opportunity. Conversely, these sectors also represent market downturns and stagnant growth, and can stagnate growth as well. This panel is designed to communicate where these industries are now. What does that mean to the business and resident community at large? And what needs to happen to strengthen this economic driver in our county? So it's a big deal. I'm so proud to be here today. I'd like to take a moment to thank our partners and our sponsors, and I'd like to pass the baton over to our key host today, Jennifer Marr. So our partners are very important to us. We wouldn't be here today without Tompkins Mahopac Bank. John Kraus is part of our panel today. John, thank you very much for being a part of it. Also, Titan Construction and Mike Sicenti. Titan Construction is a new player on our business council and is our largest partner with Tompkins Mahopac Bank. Then we have our media sponsors, which is Putnam County Business Council. Putnam County Courier, and also Mahopac News and Examiner Media. Those are key media partners. Then we have our C-suite members, and that is Jennifer Marr, who's not here for today with her real estate. We have Jonathan Schneider, who's another principal member from Schneider Financial Group. We also have Ed Santalone and Marge Ciucci from Lawley Insurance, who is on our board of directors. Then there's our director leadership members, which is myself, Mike Bucci, Christopher Marr, and his legal services. And then you have Nick D'Andrea from Park Ford here in Mahopac. So really excited for today's event. Oh, sorry, we have three more. I apologize. We also have Henry Boyd from Boyd Artesian Well Company. We also have Hudson Valley Federal Credit Union and Local 137 Operating Engineers and the Putnam County Hospital Center, as well as Millennium Printing and Graphics. Thank you so much, folks. I hope we have a great event today. Let's turn the microphone over to Jennifer Marr.
Thanks, Mike. Okay, great. So I'm going to introduce our panelists, and I'm super excited. I said when we were backstage that I think this is the first ever focus on Putnam County real estate and our economy kind of conversation I've ever seen. So I'm pretty excited, and I love this panel, and I consider them all friends. So first, I want to welcome Stacy Tompkins, who is the owner and president of Tompkins Excavating.
Good morning.
Good morning. And Jeff Contelmo, president and senior principal engineer at Insight Engineering.
Good morning.
And Tom LaPerche, who is the director at Houlihan Lawrence Commercial Real Estate, and he is also the chairperson of the Southeast Planning Board.
Good morning.
And we have J. Philip Ferranda, co-owner and founder of J. Philip Real Estate and my business partner.
Good morning.
And Kathleen Abels, president of the EDC. She's not here yet. She promises. Oh, there she is. Look at that. What timing.
Like you just, but I'm here.
You just poof appeared. That's great. Well, thank you for being here. I know it's early. See, it was a time where no one could say no because I know you have nothing else going on. And also Bill Nulk, board member of the Putnam IDA. He also serves on the Putnam County Business Council board. And Bill, I think one of you have background noise, so if you guys could mute until you're ready to speak. And then we have John Kraus, senior vice president, Tompkins Mahopac Bank, and he also serves on our board. And like I said, he has been our original supporter. So we are very grateful to you, John Kraus. Thank you all for being here. And let's get started. We are going to do a hard stop at 8:30. And this is a question that goes to all. And so the COVID vaccine promises hope for moving towards what we call a new normal. What are you guys seeing now as it relates to your specific area of the real estate or construction industry. And let's start with Stacy.
Well, I see it being, obviously a great thing for everybody all involved, and it's going to, let us all work a little bit more, which we have been doing once we were lifted from the governor. But our business is outside, so we were always okay, and we obviously following protocol. But to see everything get back to normal, or whatever normal will be, is certainly looking forward to it.
And you're seeing a trend in that direction.
Absolutely. Yes.
Excellent. I'm going to go right in the order that I introduced. So Jeff, good morning.
Good morning. Yeah. So once the smoke cleared from the initial impacts of the shutdown, we got right back to work, working remotely. And believe it or not, we really haven't seen much of an impact to us directly in terms of our workload and our clients' commitments to moving projects forward. As Stacy said, the construction industry, once the initial blip came, continued to march on. There was a lot of essential designations that allowed that to happen. So, with the smoke clearing, with the vaccine coming, I think the biggest impact on us is the morale of our people, and all of us finally feeling like there's that light at the end of the tunnel, and we can go back out and cut loose a little bit. But as far as what we've seen in the development and construction world, we've seen a commitment by people just to march on and do projects, which is very encouraging.
That's excellent. Great. Mr. LaPerch.
Hey, good morning. Yeah. Well, listen, I've been around a long time. This is my third crash, and it's crashes actually are good for brokers, in my opinion, because the back end of these crashes, typically there's value plays coming. And I thought as pre-pandemic, we were actually heading into a bubble in terms of commercial with rates and leasing, and values were getting out of control. So I think the second half of this year is going to be a great time to be a real estate broker, because the banks are going to have to, kind of revisit their loans because the evictions will be allowed to happen. And I personally think it's going to be a good thing for people and entrepreneurs to get going again, because it'll be value plays. I see leasing rates, have come down at least 20% on most areas. There's a lot of things that, restaurant plays are coming in play. Well, we see our group is doing a lot of restaurant plays right now, because the rents are coming down and people are just walking away from their properties, unfortunately, but it allows the next group of entrepreneurs to come in to do well. So I think it's going to be a great couple of years. Money's cheap. And once again, I think we needed to be reset from a standpoint of valuation, and it's happening. And I'm looking forward to the next couple of years.
Agreed. Great. Excellent. All right, Mr. Ferranda.
Well, it's nice to hear that it's good for real estate brokers. I have to agree with Tom, a little bit of survivor's guilt there, but it's a difficult time, however, to be a buyer, because you are facing an enormous amount of competition. On the plus side, while you may have to overpay for property, you're going to be underpaying for your money. So one of the things that's contributing to low inventory is that, yes, while money is cheap, you are dealing with a population of sellers who are just refinanced themselves into 2.5% perhaps, and they're a little more inclined to stick around. We are seeing a large influx of people from the city, which I'll get into later. But we all hope that we can continue some of the habits that COVID has introduced to us, like, for example, not bringing 17 people to a showing. You can make a decision to purchase a property on your own without bringing your parents, her parents, all of your children, cousins, and so forth. We have 2 people max looking for a house in residential. That is for safety. But somehow people are able to make a buying decision without the committee of their tribe accompanying them. And that, in some respects, is a good thing. And I hope that little part will continue. That's it for now. I'll talk more about the condition of the residential market when we get to my section.
Okay, great. So Kathleen and Bill, I'm going to switch gears and ask you this question. What industries have you guys been focused on in your role at the EDC and IDA, I guess, pre-COVID and how it switched post-COVID and what you see happening in the future?
So with COVID, a couple of things I wanted to piggyback on some earlier comments. I think it really speaks well to the resilience of our people and also to the resourcefulness. I think we've learned a lot of efficiencies. Like Phyllis is saying, you don't bring the whole tribe to look at a showing. I mean, closings now take a half hour as compared to 2 hours. Meetings are shorter. You're saving a lot of time with commuting. Prior to the pandemic, we were trying to attract new businesses to Putnam. During the pandemic, we pivoted to support existing small businesses. The EDC formed the Small Business Advisory Committee, which was a dozen or so people from a variety of sectors all over the county. And one of our primary things was simply to network and share information that helped businesses survive, such as information about New York Forward loans, the PPP program, all of which was very positive. And since we needed a quick infusion of cash, tourism and the EDC and the IDA, the three of us together joined the Hudson Valley Film Commission to attract and funnel filmmaking and TV productions into Putnam County because they're lucrative. They need places to film. They employ our existing performing artists, but they also support ancillary businesses like hardware stores, electricians, people that do makeup and costumes. It's an interesting industry. They come in, they spend a lot of money, and then they go home. If you have a cast and crew of 200 people that are filming over a 2-month period, those people need to be fed. They need places to sleep. So it's all good for the local economy.
Agreed, 100%. And actually, Putnam County Business Council did a feasibility study for the different industry clusters probably about 10, 11 years ago. And arts and culture film was #1 with commercial recreation. So it makes perfect sense. And I've seen a lot of good stuff coming out of those results. So I look forward to seeing what it brings in the future. And Bill.
Well, as you may expect, you guys just stole all my thunder.
Sorry, Bill.
Basically, the folks in the Industrial Development Agency have seen some interest in projects that are seeking IDA benefits, and we're happy to be part of the team of the EDC and our tourism department in promoting the good things that the county has to offer. The major project on the horizon for the IDA right now is the Glenida Distillery, and that's very much still a go. The IDA can offer the sales and property tax abatements where appropriate that can make the county more attractive. And we think of ourselves as a toolbox to help close the deal.
Excellent. So any other projects, Kathleen and Bill, that you guys want to mention on the horizon?
Kathleen, you're muted.
Sorry, Restaurant Depot is a go in the town of Southeast. They're moving dirt everywhere. I was just drove by yesterday, actually. The logistics center is, they've gotten all their approvals. They, let's see, Durant's Tents moved to Commerce Drive in Patterson. Ace Indico, their expansion is set to go. So there's a lot of stuff going on, and Bill and I are working behind the scenes with some other people that are interested in starting manufacturing projects here. So it's all good. You have to play the hands that you're dealt, and so we leverage our existing asset, location, the intersection of 2 interstate highways, 2 commuter railroad lines, and also our talent. We have a highly skilled and educated workforce, so we are constantly trying to attract bio and life sciences, information technology, and we're a natural for logistics centers.
Excellent. Great. Bill, you have anything you want to add to that?
That's just it. We're here to help. The Putnam IDA is here to help. And we think that we're headed in the right direction. And we're looking forward to some successes coming forward. I think we're somewhat surprised that it didn't hit us perhaps as hard. Obviously, some segments are hurt. But I think all in all, we're doing pretty well through this, and looking forward to being the place to be as we transition to a new kind of look. I used to say that every morning we had a workforce and 65% of the people got up and left and went someplace else. I think now we're probably looking at a much smaller percentage getting up and going someplace else, which means we're going to need to have the services and ability to take care of the folks here and be ready to offer the business opportunities to keep those folks here.
Exactly. And I just wanted to mention a big positive surprise is Putnam County sales tax revenue actually climbed $66.7 million in 2020. Nobody expected it, but it just shows that people are staying local, they're buying local, they're at home buying on Amazon, they're buying cars. All of that sales tax revenue goes back into our coffers. It's all a very positive thing. Also, our unemployment rate was at 14.4% in April, and in December it went back down to 5%. So
Wow.
I think we're doing okay.
That's awesome. All right, so I'm going to switch the spotlight over to Phil Ferranda, who you don't get all the credit, but I think that the residential real estate market does get a lot of credit for all of this good news that we are hearing. So what's your take, Phil? And, we are all reading about the exodus from New York City, and how has this impacted, in your opinion, the county residential market and the economy as a whole?
Well, it's certainly no secret that it was a seller's market to begin with due to low inventory for a variety of factors. Like I said, excuse me for the puppy, but that's just what happens. A lot of people, a lot of sellers, homeowners who might organically move out are already in low interest rates because they've refinanced, or they're not seeing a lot of places where they can move, so they kind of stay put. So the exodus of people from the city has added pressure to competition for existing listings, but it is not all bleak. And I'm going to give you a couple of statistics. While inventory is low in Putnam County, it's only 204 active single-family homes, which is like half of what it typically would be. 65 of the active properties under $1 million have been on the market for 100 days or more. So one strategy that I would suggest if you're a buyer is maybe don't go after the aggressively priced property where there's going to be a lot of competition. Throw a lowball offer at one of the ones that may be overpriced. And if you're so inclined, there's 23 properties over $1 million that have been on the market for more than 100 days. If you consider the fact that for sale by owners take up maybe 10%, 15% of the market, there's probably another 20 or 30 for sale by owners that are available out there. And you might say, well, why would a realtor talk about for sale by owners? Don't you hate them? No, we work with for sale by owners all the time. Look, we like to say we're all in the same boat. We're not all in the same boat. We're all in the same storm. Realtors are in the boats. For sale by owners are in the dinghy. So if we have a buyer, I think for sale by owners should want to talk to us. And there's also 82 parcels of land that are for sale. So if one of the 100 active properties, 65 active properties that has been on the market over 100 days that you don't want to buy, then look, there's build. Interest rates are low. Buy a piece of land and build something precisely to your specifications if you're so inclined. So there are options for some. And as Jen has rightly pointed up in our company sales meetings, you can't just go by what's on Zillow. You've got to, if you're a professional in this industry, you've got to be canvassing your sphere of influence, your neighborhoods, and being out and going and bird dogging and looking for matches. Could be something that expired 2 years ago that never sold. There are options for people. It just requires a little bit more work. Like I said, the buyers coming up from the city may have to overpay for the property, but they're certainly underpaying for the money. Historically speaking, all of us, I think, on this panel are of a certain age where we remember that when rates dipped below 7%, we all looked at one another like, well, this is historically low. And we've been talking about historically low now for 20 years as there's a race to the bottom for money. So as we return to normal, I think the economy will boom. More people will return to work. More people will come out from under the rocks and put their houses up for the market. There will be a lot of pent-up demand for purchases, and I think there's a lot to bank on to be positive about. We should focus on where the solutions are and not where the difficulties are.
Amen. Well, and since the commercial market tends to follow the residential market, let's hear from you, Mr. LaPerch. What are the hot markets in your coverage area? Because I know you cover out not just in Putnam. So what are those pockets that you're seeing, and what type of properties are in the highest demand, or any other insights to add?
Well, thank you, Jen. Jen, yeah, actually, it's pretty interesting. It was happening even before the COVID, but the e-commerce world is exploding right now. The industrial market is off the charts in terms of values. They're now, typically when you're renting an industrial space, you'd be paying for the interior space only. But now in the lower Westchester market, they're charging you for outside storage for the trucks. So the rates are crazy down there. They're close to $18, $19 a foot for industrial space, where 10, 15 years ago you could have had it for like $8 to $10 a foot. And we're seeing an explosion of e-commerce looking for last mile type facilities. And as you know, as Kathleen just indicated, Town of Southeast just approved 1 million square feet off of Pugsley Road behind Tilly Foster Farm. We also approved 90,000 square feet off of Fields Lane. And so we see kind of that market being overheated, and it's moving up here because we have, this is the area to have a lot of vacant land. Orange County is benefiting tremendously by that e-commerce. And the other markets that we see are pretty hot are the multifamily. The cap rates are coming down in a good way. The cap rates were getting crazy low from an investor standpoint, and there was a very little margin to make money. And now, as I said earlier, with the evictions possibly coming in the second half of this year, things are going to open up in a good way, and we're starting to get a high demand for people looking for multifamily type investments. We see, like I say, the retail is still hurting, even though the rates are coming down. I was out looking for some space the other day for our company, looking to relocate one of our offices. And in a plaza that we were last year, they were quoting $35 a foot. We can get the same space now for $21 a foot for probably 3 to 6 months free rent and a $20 work letter. So the values have changed in terms of that goes on. And finally, I think the other part, the restaurant market is going to be coming back. I think by this time next year, you'll see the restaurant market and a lot of new operators, because once again, a lot of them just walked away, couldn't pay their rent, and there's another opportunity for that next wave of buyers to come in. So like I say, I'm pretty excited about the next couple of years because of the reduction in value that allow new players to come in. So it's exciting. So the market's going to heat up shortly. I'm looking forward to it.
I agree. And we actually launched a business brokerage, Tom, because we see so much of a demand of first, like, businesses that thrive through COVID are exhausted. And like, now I want to go out on a high.
Yeah, absolutely right.
And then there's all these new energy and money coming up, and they want different ideas. And most of them are interested in a startup, but some of them are definitely interested in something that already exists. So we got right into it because we saw the same writing on the wall. Yeah. And it's fun. It's, All right, so let's take a different spin and let's hear from Jeff Contelmo. So I'm curious, and I'm sure we all are, it sounds like everything is just groovy, but there has to be some differences. So how are your clients adapting their thinking and strategies for the future? And how can municipalities adapt to ensure a thriving community? And do you see more repurposing, redevelopment, infill projects, or actual breaking of ground?
A lot of questions.
I know. That's because I love your brain. You know that already.
So the first part of it, in terms of our clients, our clients represent a very diverse group of organizations and individuals. On the development side, we work for a number of developers who pursue residential, commercial, institutional type of development. They're all trying to figure out the trends, and basically what Tom spoke about, where's the movement, where's the action, where's the place to be. in terms of uses, in terms of geography, all of that. And Tom spoke, I thought, very, very accurately about where we see developers following some of those movements. On the municipal front, we're eager to see the investment in infrastructure that's been spoken about, starting in Washington and hopefully trickle down. I think a lot of the municipalities are a little bit gun shy to just jump into larger commitments on projects, even though, as others have said, money is cheap. Institutionally, we've seen organizations make tremendous investments looking forward. Again, I think they're capitalizing on cheap money. As far as the question relative to how can municipalities adapt to ensure a thriving community, I work in a lot of different communities across the region, and I see the full spectrum. And the diverse, trying to build a diverse community, and diverse in the sense of not just population, but the different type of housing, the different type of businesses. We all know diversity brings stability. I think some of the more savvy municipalities are very aware of it and proactive with it. We still have a lot of municipalities that really don't see that. They want to basically maintain the status quo, which we respect. But I do believe that the more progressive towns are really bringing the other guys, showing the other guys really how to keep a community very relevant. And one of the things I'll say is that we've observed the idea that back when things were really hot, there was the ability for a community to, with a developer, get that developer to help the community maybe with some other things that the community might need. And I call that kind of the take mentality, where the municipality says, maybe I can take a little something from him and help us out. Those days are gone. And again, the more progressive communities have realized that those days are gone, and that they have to help, some of these new businesses or new developments that come into their town. And again, we see a great difference in how the communities that understand that dynamic are progressing, while some of the other ones are stagnating, in my opinion. In terms of the question relative to repurposing versus new development, we really have seen, no real change, in my opinion, there. We see a lot of redevelopment in the urban areas, which is logical. We see continued new development in some of the rural areas, and kudos to Tom LaPerch and his group in Southeast, because I think most of the projects that Bill and Kathleen noted are in Southeast, and they've taken what I consider to be a very smart approach toward working with developers on new groundbreakings. And again, we see that those trends will continue to morph with the market. So I see bright skies ahead, and I hope I'm right, because I think it benefit all of us in the county as a whole.
Absolutely. Do you ever think we'll see a little more mixed use on Main Street, and a little more, I forget what it's called, when you allow some commercial in residential areas?
Yeah, I think the mixed use thing, particularly in the developed downtown areas, is a must, right? I mean, again, savvy communities understand the concept of critical mass. I mean, you've got to bring people in to be able to support the services. And, the idea of less is better with residential development can have a negative impact on commercial development. We all kind of know that. We've seen movement toward, again, in the savvy communities, toward multifamily housing, realizing that brings critical mass, brings a diversity of housing, allows our young kids to stay in the community, allows our seniors to stay in the community. So the idea of multifamily housing, which, back 15, 20 years ago, we didn't see a lot of it. And most of the communities were single family homes. Less is better. We're seeing a trend where it's like, hey, we really got to rethink this dynamic. And again, we see different communities react in different ways.
Yeah, interesting. I also like that thought of there must be a lot of people who, want to have a more commercial component to their residential house. And so I hope that they become a little lenient with that too, because I think we need to support that. That's a trend that's going to be here to stay. Thank you, Jeff, always for your insight. All right. So Stacy, your industry is one of the first on a new construction project. Based on what you're seeing now, what can we expect to see in 2021 in terms of new construction?
Well, first of all, I'd like to say that we're the people moving the dirt over at the Restaurant Depot. So that's us over there, working with Jeff's office, which is always awesome to do. We appreciate always his work. And this is our first big project, I will say, in Putnam. We've done lots outside of Putnam. Through the pandemic, we really did not see a slowdown in the bidding. The bidding is enormous. We're getting leads every day, and we are the first. We are the first trade in, last trade out. Traditionally, we do residential work as well, but most of our work is commercial, and we do see it. It is nonstop. It is municipalities are putting out work to bid. Private sectors are putting out work to bid. So I do feel very encouraged of what's going to happen and keep happening for the positive going forward. As a business, it's very competitive for us. It's more competitive to get the jobs and do them, but that's on a business end. But as a whole, and seeing what is happening, it is very encouraging. But I will comment on Jeff's on residential, because we do residential. I'm also a home builder. So we've built 50, 60 houses over the years, mostly in Peekskill and some in Cortland. So I just like to comment on that because I feel like I have a little handle. Yeah, I agree with the fact that single family houses for us financially to build with the costs of lumber and materials is really become very difficult to make any money on. Excuse me. So we are moving our thoughts into, building multifamilies as well. So, we do feel that, we built a house 6 months later and the cost of lumber was double. Yeah. So we do have that challenge. Yes, money is cheap to borrow, but the cost to build these things are, going up extraordinarily at a fast pace. So I see single family on a personal level for us. We're moving out of that trajectory of building single family houses for a while now. But we do need them because the inventory is low. But right. I'm excited for the future. But we do need to watch the costs to build these things, and people and the regulations and what are through New York State and through all the local municipalities. It's a challenge to get these projects approved. It really is. So we have to be mindful of that to help those businesses and those projects get streamlined as fast as possible.
Absolutely. Yeah, and that's one of the focuses we do every year. We have like a roundtable conversation with the local municipalities and the process. But Tom, you guys have made great progress on that front in Southeast, and I hope everybody follows suit for sure. All right, John, none of this can happen without money. So pre-pandemic, we were in a hot economy and market, and post-COVID, what do you predict for lending and financing, and any major changes ahead?
Okay, well, first of all, I just want to say that Tompkins Mahopac Bank cannot take credit for the low interest rates, but we're certainly benefiting from it from the lending side. Obviously, from the deposit side, it doesn't bode well. But let me just begin by just saying where we've been and then where we think we're going here. And I do share a lot of the optimism that seems to be coming from this panel here. So I do share in that, although I will say there was cautious optimism, a lot of hope and so forth. But let's just go back to where we were this past 9 months or a year ago. For 11 years, our economy was humming along nicely. It was a good, healthy economy. It was steady growth, albeit most times it was fairly, slow, but it was steady and it was healthy. So we had the longest expansion since the Great Depression, and even as early as January and early February of 2020, while there was still a lot of chatter about COVID-19, business confidence and consumer confidence was still fairly high. And it wasn't until mid-February where all of a sudden that this was becoming a reality, that this became a shock to the entire community here. So what happened was small businesses found themselves quickly going from a very solid economy to almost near depression conditions just in a matter of weeks. I mean, think about it. That is just stunning, and it's such an economic shock. And small businesses, and I do emphasize small businesses because, yeah, while a lot of larger companies like airlines and cruise lines and so forth and tourism, yeah, they suffer too. But a lot of the big companies did not feel the pain that the small businesses felt. And we saw it here with our own customer base right here in Putnam County and Hudson Valley. So small businesses were doing well with revenues, and just in a matter of weeks, all of a sudden they found themselves in survival mode. And a lot of them came to the banks and said, we need help. And especially those who had outstanding loans. So first and foremost, it was just a matter of doing triage here. And that was for us, for the banking community, come forward, come up with loan deferment programs. Fortunately, the government stepped in very rapidly with stimulus, with PPP, and that turned out to be hugely successful, and it provided a much needed lifeline to small businesses, just so they can get through those critical few months and try to figure things out here. So here we are, 9 months later since the height of the pandemic, and we're now in our second stage of PPP. And again, I see a lot of the financial statements of small businesses working on the PPP loans, and I do see improvements. So that's the good news, but many are still struggling. But they are trending in a positive direction here. So what I'm saying here, I think this is a confidence issue, a confidence among small businesses and a confidence among the consumers, because without that confidence, we are not going to be on our way to recovery here. So I do see that confidence is starting to come back. Small business confidence is now upward again, and that's the good news here. And that's going to bode well for real estate as well too, because during the pandemic, we have not been doing much lending to the business sector here, because again, small businesses just did not have an appetite or need for credit. Again, it was just a matter of survival, it was a matter of preserving and trying to get the most out of their shrinking cash flow and preserving cash and liquidity to get them through the tough times. So again, that's where loan deferments and a PPP came in. But what has stood up, and I will share some of the comments I've heard from my co-panelists here, and Tom LaPerche mentioned it in the commercial sector, that what has really helped in our lending here was commercial real estate. We have continued to do well with commercial mortgages with particular industries. Now, not all industries share it in the relatively stable real estate market here, but there were certain industries like hotels clearly did not benefit, and there were also some office buildings, which we don't do much office lending, but office building values were right now a little unknown, because we're seeing, when we get appraisals on our real estate deals, we're seeing appraisers are putting disclaimers in their valuations because they're seeing conditions they haven't seen before. So they're saying, yeah, we understand cash flow and net operating income and how do you put a cap rate and so forth, but with increased vacancies and so forth, and with the uncertainties of the economy that we were faced with a few months ago, appraisers just did not know how to put a real stamp value on many of their properties. But we have seen some real strong buoyancy here is with, like Tom said, light industrial properties. Multifamily has also been very strong. And one sector that has also been benefiting very well, and I'd like to see more of that here in Putnam County if we can. And that is the medical industry. Healthcare and medical has really been strong. Yeah, they also took a big hit back in the second quarter of 2020, but they're coming on strong too. And Westchester County has benefited from the healthcare and medical markets, and I'd like to see a lot of that spill over into Putnam County as well too. So what I see as far as any going forward. Oh, let me just also add that our bank, and like many banks in here in the Hudson Valley, we have benefited from with our residential mortgages. We had a record year at residential mortgages. I mean, our second best year wasn't even close. So that seems to be counterintuitive as to why the residential mortgage market were so strong. But our folks here at the bank just could not keep up with the volume. They were working at 9, 10 o'clock at night every night, working with their clients. And again, we just had record volumes, and that was, again, as you heard from this panel before, benefited from the exodus from the city and the flight to the suburbs, and also these low interest rates. I mean, how much lower can they go? And we've been saying that here in the banking for the last few years. So yeah, how much lower can these rates go? And just every time we say that, sure enough, they come lower. So, so what's ahead for the future here? Well, I can tell you right now that interest rates for the foreseeable future are going to remain low, and that is going to the cost of capital being so low is really what's going to help fuel the recovery. We're seeing a lot of that here in banking and the real estate mortgage market, both on the commercial and the residential, continues to be strong as a result of that. Secondly, though, like I said, this is a confidence issue here, and it seems like our confidence is going to continue to improve as the level of uncertainty continues to come down. And there's a lot of hope with the vaccine. So the rate of the effectiveness and the efficacy of vaccines is really going to be important. I know we're hearing all kinds of reports, and these next few months, I think, are going to really be a telltale of where our economy goes as a result of the vaccination process here. And then lastly is continued government stimulus. Now, I know there's a debate right now with in the White House as to how much more stimulus do we need and where does it go to and so forth. But the stimulus process from our viewpoint here has worked very well for small businesses. And that is why, because many small businesses have been able to survive as a result of stimulus, there is a lot of hope for them that they're going to be able to now recover. And we're now starting to see that here at the bank. Like I said, we have done very little commercial lending during the pandemic. Most of our lending has been in the real estate sector here, but we're now starting to see some uptick in commercial credit demand, and that's a good sign. I will also add to Stacy's comments here that we deal with a lot of contractors, and we're now starting to see a lot of activity with the contractors, with the trade and so forth, and with their lines of credits, and they're now getting back into the game and looking to purchase equipment and so forth. So again, that's all going to benefit us as well too. So I share the optimism that I think we're going to be in for a good stretch here with recovery. Notwithstanding any other economic shocks that may hit us here, knock wood, but I'm very hopeful here. I think a lot of the programs that the private and the public sector, the government, has done in the past few months seems to have worked. And unfortunately, while many businesses are going to be recovering and the real estate market is going to be recovering, there are going to be certain pockets of industries that are going to be slow to recover, and they're going to be in the tail end. And again, that's going to be industries like hotels. I would have said restaurants a few months ago, but I do agree that I think restaurants are now going to probably share in the recovery trend that's taking place right now. But also entertainment and theaters, that's also to be determined, and catering halls, that's also to be determined how quickly they will respond. But we're starting to see some pickup in loan demand, and that's usually a sign that the economy is recovering, and businesses are starting to feel better about themselves. Lastly, I'll also say that it's also going to be a consumer confidence, because we need consumer spending here. And yes, the stimulus money that the consumers are getting is going to certainly be helpful, but we got to get them back to work. I know we're dealing with still millions that have lost their jobs that have not been recovered yet, and those jobs have to be recovered if this economy is this recovery is going to be sustainable here. So keep in mind what we experienced back in 2008 with the financial crisis. That was a Wall Street recession. This experience that we just had in 2020 was a Main Street recession. This impacted our neighbors, our local businesses, and we all stood together. And I think the business community is going to come out fare much stronger in the days ahead, and that's going to bode well for the banking industry as well too.
Excellent. Thank you. I love what you said about the confidence issue. And I think you remember with the Putnam County Business Council, early May, we pivoted into focus on what you can do. You can't focus on what you can't do. You just got to keep moving forward. And I think confidence is a huge part of it. And I think this panel today did a great job in boosting that confidence for Putnam County. So I thank you all. And I'm just going to end on a last question and or an invite to anything you didn't get to say that you'd like to say. Thanks, Corinta. So how do you guys think post-pandemic planning and activity as described here today will impact our county and the Hudson Valley region? And what do we think needs to change to ensure Putnam County keeps up? Bill, I think you have weird feedback, but go ahead.
Just like to put in that with my other hat in the Putnam County Business Council and monitoring what the government is doing and stuff like that. One of the things that we've been pushing is for, obviously upgrades in infrastructure, and Jeff can follow on that. But Putnam County, in order to take advantage of this influx of people that are going to be staying here and moving here, we need to get some better support infrastructure, not only in the basic stuff like water and sewer, but also in the broadband coverage and the cell phone coverage. And I think that the government is aware of that. Certainly at the state level, they're talking about it, but a lot of that depends on what's available coming down from the federal government. So that's what we're kind of pushing for, from the agencies and the groups that we work with there.
Great. Thank you. Anyone else?
I just want to comment. No one's mentioned today is simply demographics. I think that mixed use is going to be definitely trending. And one of the reasons for that is our population is aging. The birth rate in Putnam County last year was down like 23%. And the percentage of population 65 and older climbed from 11% in 2010 to over 16% in 2019. So when you look at that, it's going to affect a lot of things. I mean, if with the birth rate down, will we be able to regionalize schools, which would result in savings on our school taxes, which would be a very positive thing. But we also have to consider aging populations. It makes sense to have senior housing maybe upstairs over a shopping center so that they have pedestrian access to the UPS store, banks, grocery stores, and it makes a lot of sense. It's always been like that in cities. You have extra eyes and ears watching over a community, and I think it's going to make more sense up here as well.
Jen, I think what really needs to be done is the towns need to kind of, as Jeff brought up earlier, to revisit the zoning. I think the town of Yorktown is an excellent example of what's going on. They had that big vacant Kmart building and in the middle of town. So they decided to, think outside the box and allow that property to turn into a mixed-use development and a walkable community. Back to what Kathleen's saying, that needs to occur. And I think it all starts with the towns revisiting their zoning, seeing what's not working, and having an open mind to changing thoughts about, creativity of along Route 6, all that Route 6 area. All those vacancies can be turned into something different, but it starts with the town board rezoning the properties. And I think that's the way we got to look, because we need affordable housing, and those kind of properties would fit well for that kind of demographic that Kathleen spoke of earlier. So that's my opinion. I think you just got to get to elected officials to say, wake up. we need some change here.
I just wanted it to not be me who said it, Tom. So thank you. And also, we have to stop being afraid of the word affordable housing and educate people what it actually means.
I couldn't agree more.
It is not government subsidized low income housing. Not that I have a problem with that either, but affordable housing is exactly the key. And we have to stop being afraid of it, and then we have to educate. So great.
Yeah, Jed, I'll jump in on that. That comes back to my point about diversity of housing, diversity of businesses. One of the things we know is that, Putnam as a community and as a county is small. And that puts us at a disadvantage in certain aspects, but also gives us advantages, in my opinion, of the ability for a group like this, and I consider you friends and colleagues, for us to work together to make the issues known, what we need from our communities in terms of, more forward thinking, zoning and planning, more collaboration, more rolling out of the red carpet to bring the guys in who want to go to Dutchess or Westchester. And, this group as a whole has, I think, a lot of positive energy, a lot of brain power. And, if we continue to work together, under the auspices of this group, this organization, we can make a difference. But yeah, we need to work with our elected officials to become proactive, because I personally see the stalemate in growth in Putnam, just population wise, as a potential kiss of death.
Mm-hmm.
Because, our world in the United States is based on a 2 to 3% growth rate. And if you're not on that track, you're losing.
Yep.
The idea, there's a critical mass idea that I put out earlier, is really what makes the community stable with that slow growth rate and supporting businesses and everything that we need.
Yeah. And I agreed. And as Mike Bucci stated when he opened, the idea here is this to be sort of a cluster within the Putnam County Business Council, and we'll grow it with more businesses and have a real voice and be able to share concerns and get it out there. So awesome. Anyone else have anything they want to say?
Yes. I know it comes as a shock that I would want to chime in, but it may seem strange as a residential broker to say this, but I'd love to see more investment in actual infrastructure. People are working out of their homes more. They are they're not just sleeping there. So we have seen how fragile society is if infrastructure fails. When we look at what happened to Texas, and you don't need to be a political person to see, that there was an opportunity or a story about 10 years ago where Texas was advised to update their infrastructure, and they elected to save short-term money. It's going to take a lot of political will, and there would be some angst, but investing in infrastructure overall is profoundly important, because we can't just be one big subdivision here with a few tiny little pockets. There should be destinations, and when they're built, there should be infrastructure, better water, better power, sewers, whatever can be put in, because people are spending more time at home. And if the weather continues to be erratic, homes need to be habitable. Neighborhoods need to be habitable. So that would be a rising tide that carries all boats.
Yep, agreed. Infrastructure is something we've been working on.
Oh, I know you have.
Long time.
I know.
Okay. Anyone else want to say anything before we close? John, Stacy?
Yeah, Jen, I'd just like to chime in. What Tom and Jeff were saying with regards to development, but as a longtime banker here in Putnam County, one of the things, a common theme that I have seen over the years has been, and I just want to throw this out as a question, probably more as a statement, is do we need a more efficient or more effective approval process for development? I've seen a lot of projects that have just taken years, and I don't want to cite any names, but unless you have deep pockets and you just have a strong legal team and so forth, it's very difficult to get a significant project approved here in Putnam County. That's from what I've seen in my experience. So I just wanted to ask Tom and Jeff what you feel about that.
I can't wait to answer this. Listen, I really can't wait to answer this because Jeff will back me up on this. Most of the perception on the street is the towns don't want it. But I can tell you as a chairman of the planning board for the last 10 years, we're not your problem. The outside agencies, the DEP, the DEC, and all those that are undermanned and don't run the agencies like business with a sense of urgency. I was sitting on an application that Jeff was working on. It took 11 months for the DEC to get back to this one application, and I finally lost it and went right over their heads. I went to the elected officials, and with Jeff's help, they got the letter like within a week. But it's not the towns. I can tell you, most towns want stuff. It's the lack of professionalism that are in the outside agencies that are sitting on stuff, and they can give a hoot. It's not us. It's the agencies. They actually, DC put out an email the other day saying that they apologize. They're undermanned and the COVID. Hey, get over it. Let's go. And my point is, I want elected officials to stop wasting money, say, come to New York when they don't have the agencies staffed properly to service us.
Yeah, unfortunately, I can't be as blunt as Tom because I have to go before all these boards and deal with a bunch of the municipal officials. But I will echo the fact that we do need consistency on the state level with the statements that come out of Albany in terms of New York is open for business. And we need that to trickle down into the departments and into the people that people like us are dealing with. Another quick point, Tom, kudos to the town of Southeast again, because you guys do try to make your process work in an efficient manner. I can't say that for all municipalities, unfortunately. Every municipality is different and for good reason, but we see a very wide breadth of attitudes just getting caught up in their own procedures, which again, Tom, you're wired to go. Everybody who knows you knows that. And you carry that across through your board. Nothing's done without a close look, but you're very keen on an efficient process. And I think there's a lot of boards in the county that could learn from your board in terms of, instead of, oh, what's wrong and why shouldn't this go forward? The attitude's got to be, how can we help this go forward?
Right.
Time and time again, boards tell us, well, look at this one other little thing and then come back. That's a month of time. And in John Krause's world, a month's worth of interest is a lot of money, and somebody's paying. So, we see a wide band there, but the more we can close that down and get to an efficient process, I think everybody wins. I mean, that's the way I see it. But,
Great. All right, Stacy, want to take us out?
Well, thanks to everybody. I think this was a great panel. I think the conversation needs to keep going, and we have a good start. And I couldn't agree more with. I'm sure, Tom, Southeast. I'm sure you guys are making that process as easy as possible, but I would have to agree with Jeff because I see it on a business when I'm trying to get my own things, or I'm at that. I see what's happening with these projects being, okay, well, we got another 6 months before we're going to get approval. And that one thing that you'll have to say exactly that, like, well, why didn't you tell me that last month that I needed that one thing? And then you've lost that time. So, but again, great energy here, and thank you, everybody, and have a great weekend.
Yes, I actually feel a lot better after this. I watched Westchester's, and it really wasn't quite as upbeat and confident and hopeful. So I think we're very blessed to work in this community, and many of us live in this community, and we're great. It's awesome to have such great relationships with people throughout all the different parts of this industry, and we will definitely keep this conversation going forward. And so thank you for the patience on the new platform. I know it's different. I know I have people freaking out that they couldn't get in from the bank and this and that. But you got to keep trying new things in this virtual world. And it was kind of fun on Facebook, a lot of interactivity going on there, and it'll be played back through our website and through our newsletter and on our Facebook page. It's there now, and it's also on our YouTube channel, and I will email it out to this panel as well so that you have it. And thank you all so much for all your insight and all your passion for Putnam County, and looking forward to a great year for real estate and construction.
Thank you for having us.
Thank you.
Thanks, Jen. Thanks, everybody.
Thank you.
Thanks, everyone. Have a great weekend.